Hello traders, Gary Wagner here. Approximately 1:30 in Honolulu, 6:30 in New York. It is Tuesday, January 12th, 2021, and this is the daily report for gold and silver. A nice move to the upside in both gold and silver, and we did send out a trade alert yesterday and then again this morning for our New York traders. So we are actively long both gold and silver. We'll talk about that throughout the show, but first, let's take a look at what gold did today. In overseas trading last night, gold did trade much firmer, actually hitting a high of $1,864 before backing off. We're looking at the most active February contract, currently up $5.70 at $1,856.50. We're going to look at a couple of gold charts, but before we do that, we did send out a special trade recommendation. However, on this recommendation, we are suggesting that you go into what will be the most active next month because February is set to expire fairly soon. We recommended the initiation of April gold contracts. The symbol on that is GCJ21. That is currently at 1860.20. We went long at 1859 for those who took it when we sent it out in the evening here in Hawaii. And for those that bought it on the open in New York, they got in at a little bit better of a price. But we'll talk about our upside targets and goals as we look at our first chart. Traders, on today's show, we will talk about our current trade, various upside targets, support and resistance levels. But first, I want to take a look at a total of 3 charts that I've been working on for the last week or so, in which I am putting together my price model forecasts for 2021. At the middle of March, which is the official moment the epidemic became a pandemic, and market forces took gold down to about 1,450, all the way up to the top. This is the new all-time record high at 2,088, and we are labeling this as a third wave conclusion in terms of our Elliott wave count. What is interesting is the market had a multi-month correction, moving gold prices from 2,088 down to a low of about 1,775. And when you look, we have a basic fib retracement of that entire data set. And what you can see is the retracement pretty much aligned itself with a 50% retracement. Now, here's what's interesting. Once we have wave 3 completed and wave 4 completed, there are a couple of different techniques that we can utilize to forecast where that final 5th wave will go. As you can see, I have compressed the chart, and we're looking at the important different levels that we could see gold go to. Now, of course, if we have the 0.618% extension of wave 3 to equal wave 5, that would take gold pricing to about 2174. You can see that right here. Now, the rule is that wave 3 cannot be the shortest of any of the impulse waves, so we could get a 5th wave that was between, say, the 0.78% extension and anything under a full 1-to-1 relationship. We are personally predicting that we should see gold move into an area between 2360 and 2320. And traders, lastly, this third chart combines all of the factors we talked about in charts 1 or 2. We're basically using some of the same tenets, but I'm using a couple of different math projections. I still believe because of the underlying fundamental strength, meaning the massive amounts of expenditures and debt that we are incurring to resolve the pandemic, we're really looking at an area of about 2,200 to 2,320. That is our long-term target. We are looking at Forex gold, which is currently fixed at $1,855.40. Traders, we also recommended the initiation of long positions in March silver futures as well as Forex silver. If you're trading the March futures contract, your entry price was $25.48. Market is currently at $25.65. If you were in the Forex market, your entry price was $25.39. Stops are $24.11 for March futures and $24.31 for Forex silver. You know, over the last week or so, we've been speaking about the distinct differences in the way that silver and gold have been trading. Typically, they do trade in tandem, and typically you will get silver outperforming up days in terms of percentage gains and outperform drawdowns during days where we see the market sell off. In the case of silver right now, we had a pretty strong day when we consider that it gained 1.4% on the day. That's approximately 35 cents. And really what I've tried to do is to allocate key levels that we want to concentrate on, of course, that could provide room for resistance should the market continue to run to the upside. Now, the first level is the level that we are currently at. And that level, of course, is this white line here. It is the 23% retracement at 25.76. There's one above that that is just above 26. But then if the market moves up, 28 is fairly strong. And then you've got 28.43, 29.22, and then 29.93. What I do like about silver is the fact that you can see the shortest term moving average, and that of course is our 50-day moving average. That is beginning to move into alignment, or beginning to cross, I should say, above the 100-day, which has been on top. The other thing that's been extremely impressive is we never even came close to the 200-day moving average. Traders, maintain your current long positions in gold, maintain your current long positions in silver. Traders, one of the most important contributing factors to the growth in gold pricing today was dollar weakness. Dollar down about 0.4% at 90.03. And when you consider the net change, 0.45%, we look at the net change, for example, of gold futures, which was up 0.23, or spot, which was up 6.4. In spot, you did get some buying coming in along with weakness giving you your end price. In the futures market, it was really all about the dollar today that was the impetus for gold moving to higher ground. And then lastly, I want to take a look at Bitcoin futures, because Bitcoin has been on a roller coaster of a ride, of course. After hitting over 40,000, I believe 42,000, it came down about 5,000. Today, it's up about $535, 1.58% at 34,315. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.